Welcome to Mortgage Minutes, where we demystify the loan process for you. I'm your host, Austin Baker, along with my co-host, Jonathan Bug. Woo!
All right, let's go, brother.
Let's go. What are we talking about today?
So today we're going to be talking about disclosures, and we want you to know what are disclosures and why they matter. So let's jump into it, big dog.
Yeah, kind of important. We get asked about disclosures, as we should, on every single file. So if you're about to get a mortgage, you're about to get a whole lot of disclosures. And there's a lot of stuff that matters in the disclosure package, and there's a lot of stuff that, it's not that it doesn't matter, but it kind of doesn't matter. So we're going to break that down. We're going to walk through the ones that do matter, what you really need to be paying close attention to, and then the rest of it, what you just need to sign to be able to get a house. If you don't sign, you're not going to get a house.
That's right.
Kind of demystifying some of that, and then also answering some of the big questions that come along with it. So out of the gate, Jonathan, what matters in the disclosure package?
Yeah, so like Austin said, you're going to get a bunch of federal regulated stuff and state regulated stuff, a lot of fair lending stuff. You can take your time to read through it. It's up to you, but it's in the package.
Fascinating.
It's in the package, but the things that really matter the most is your loan application. And so that's what you put when you apply through our simple system. That's where your assets are, your liabilities, kind of your full financial picture that you presented to us whenever you applied. So that's the first big piece.
Yeah, exactly. So what you want to check is you want to check your loan application information. So you're going to apply with us, and then in the disclosures, we're going to send you, hey, here's what you gave us. Mm-hmm. Double check that all this information is correct. And so something that comes up a lot with loan application information is bank information. Like, oh, that's not what my current balance is in that account.
Yeah, I have more or less.
Yeah, or my street address was wrong for my prior address, stuff like that. Does that stuff matter? Do we need to not sign our disclosures if that information is incorrect?
So sign your disclosures is the quick answer, and we can always change things on the back end, and your assets are always going to be changing, right? Your money might be in high yield savings accounts, and it might be in the market. So your assets, you're spending money every day, so your assets are always going to be fluid. So it's all right if they're not 100% right on your application. Go ahead and sign, and just let us know what needs to be changed, and we'll update it on the back end.
Yeah, I mean, obviously there's some things, if you have questions about it, let us know, and we might need to get a new set out. But a lot of it is okay, it's fluid, and so it's okay to go ahead and sign. All right, what else do they need to pay attention to in the disclosures?
So the second big piece that's in here amongst a stack of everything is the loan conditions or terms, or the loan estimate is what we kind of call it. And so you're going to see a breakdown of our origination fee. You're going to see a breakdown of all the third-party service fees, the survey, appraisal, all that good stuff, title company, and you're going to see kind of an estimated cash to close and things like that. What we like to say is those numbers are very flexible, because until you get to the title company where we balance everything, those numbers really aren't finalized until 3 or 4 days before closing.
So the loan estimate, also referred to as the LE, is our best guess as to what the closing costs are going to be. So it's telling you two things. It's telling you what is the loan program and the terms of that loan program that you're applying for, and then what are the closing costs associated with it. Kind of the big deal. That's what this whole experience is all about. And so you want to pay close attention to that. Make sure that all of that makes sense to you and that you understand what you're signing. But this is also flexible. So we can change your down payment.
Terms,
we can change the term of the loan. So you are not absolutely committed to this. This is just, hey, this is what we discussed. This is the program and the structure that we were leaning to based off of our last conversation.
Yeah, we're painting a picture, essentially.
Yeah. So you want to pay close attention to that. If you have any questions, absolutely ask.
But those are the two big things when you think, what are disclosures? It's your loan application, it's your loan estimate. But why it matters is the most important thing in my mind with trying to get you closed, trying to do things timely, is it doesn't allow us, without it, we can't start on your file.
Ready, set. We can't do anything until you sign them. So you guys sign your disclosures, because that is what authorizes us to begin working on it. The rest of the forms, like Jonathan mentioned, after the loan estimate and the loan application, are either state required forms, federal required forms, or investor required forms. And so literally, like, if you have issues with any of those forms, it's all just a bunch of legal boilerplate stuff. You're not going to be able to get a house if you don't sign those. So signing your disclosures gets us out of the starting blocks. And so we're able to start processing your file and order your appraisal. We're basically stuck. We cannot move forward until you sign your disclosures. But that brings up the big question that everyone is always wondering. Are they obligated? Like, are they stuck with what they've signed? You know, are they committed to us? How obligated is somebody after they sign their disclosures?
Well, a quick answer is you're not obligated to anything. Austin, I always say everything's written in pencil until we get to the closing disclosure right before closing. And when you sign with blue ink, that's when things are finalized. So you're not obligated. When you think what are disclosures, it means that a party, meaning your lender, is disclosing information to you. And so that's why they're called disclosures, and that's what the purpose of them is. And so when you're signing your disclosures, you're just acknowledging that I've been disclosed loan terms and conditions, whatever it is, by my lender. And so you're acknowledging that by signing. I was telling Austin earlier, it's like when you get a speeding ticket. You know, unfortunately it happens, but that officer is going to give you a court date and he's going to say, I need you to sign this. You're not pleading guilty. You're just acknowledging that you received this ticket. Yep. And then you can go and do defensive driving or hire an attorney or refute it, whatever it is, but you're not pleading guilty. Same way with disclosures. You're not signing a contract. You're not committing anything. You're just acknowledging that my lender is properly disclosed to me. And again, it lets us kickstart working on your file. So,
yep. You are not obligated to the terms of the financing until you sign on that at the closing table, period. You can walk away. I tell people all the time, you can walk away from this whole thing at up until the point of closing. You might lose your earnest money. You might lose some other stuff, but
if you
you're
have
not
to,
obligated to. And if you have to do it, you have to do it. So signing your disclosures doesn't obligate you to anything. It just enables us to start. And these are the two big things you want to be paying close attention to. If you have any questions, you know how to reach us. We'll see you around.